right, thank you everyone who's joining us for the Economic Forecast Project's COVID-19 webinar. It is 5 after 4, so I think we'll get started here. First of all, I'd like to introduce myself. My name is Charlie Nussbaum. I'm one of the senior research analysts at the Economic Forecast Project. We're also joined by a lovely cast of panelists who will be speaking a little bit later. We're also joined by two of my colleagues, Travis Saronic and Daniel Cullen, who are also senior research analysts at the Economic Forecast Project. They will be helping us with the Q&A and some of the back-end stuff as we progress through the rest of this webinar. Now, before we get started, I know that Zoom may be new for some of us, and in particular the webinar format, and so I just sort of want to lay out some of the ground rules and how we've structured this webinar. So for the sake of security and to prevent any Zoom bombing or anything of that sort, we have restricted the typical chat box. And so you will not be able to chat with your fellow attendees. We have also restricted access to audio and video so that only our panelists should be able to be seen or heard at any particular time. We will be doing a Q&A session at the end of our panelists' presentations. You should see at the bottom of your screen a box labeled Q&A to which you should be able to submit your questions as we progress. Travis will be monitoring the questions that come in, and when we get to the question and answer phase of this webinar, he will be the one who will be asking questions. Obviously, we won't be able to get to every question, but we will, we'll do our best to get through as many as we can. So now I'd like to transition to our presentations. Oops, sorry there. So without further ado, I would like to introduce someone who I think we're all very lucky to have in our community. He cares very much about the Economic Forecast Project, his students, and Santa Barbara County. And so I'd like to introduce the executive director of the Forecast Project, Dr. Peter Rupert.
Great, thank you very much, Charlie. Thanks everybody who's helped on this. I think that for some reason I'm not seeing the right screen. Anyway, as people typically know, we do a large event at the Granada Theater. Typically in May, we were supposed to do it May 7th, and I guess some recent events have made us decide not to do that on May 7th. And instead, we're going to be presenting a series of these webinars, highlighting some different areas in our local economy. Today, a little bit we're going to do about tourism, leisure, hospitality, and a little bit about business lending. And every time we're going to have a health update on where we are. So that's the idea. Again, we'll be doing these. Next time, I hope to do retail. We'll do a little bit about, again, health and the nonprofit sectors. And over the next few weeks, we hope to provide lots and lots of information that's relevant to all of us. So the goal of these webinars and of the Forecast Project basically is we're trying to save lives and livelihoods. And many people have said that, there's a trade-off, and when we open, we're going to be worried about people getting infected, perhaps sick and dying. And I want to dispel that, and I think that we can do both of these things. I don't believe there's a trade-off necessarily if we do things in the right way. Said differently, I think we can save both lives and livelihoods. Why do I mention livelihoods? There's lots of information from various sources that basically say that if people during recessions lose their job, are unemployed for a long time, go into periods of despair. There's increases in opioid addiction, suicides, etc. So these things can be stopped if we do these things right. We'd like to provide some information. Hopefully, we want to open up a lot of communication channels across different groups, as well as with our policymakers. And finally, we really are going to need some virus-safe strategies for opening before we open. And typically, I wanted to call this thing opening day because many people ask me, when do you think we'll be able to open the economy again? Of course, it's not up to me, and we're going to hear from various people. So let me talk about what we know and what we don't know. Our lineup today is going to be Lynn Fitzgibbons, who's from Cottage Health, infectious disease specialist, our local celebrity in terms of that. Kathy Janega Dykes from Visit Santa Barbara, Sherry Villanueva from Acme Hospitality, and George Lease and Roger Gilbert from Montecito Bank and Trust will also be speaking later. So what's the state of the world? My view right now is really to talk about how little we actually do know. And when I say how little we know, it's really about how to understand this virus, COVID-19, how it's affecting us, where we are, and understanding the economics. What's going on right now is many people are making decisions based on best guesses because we have very, very, very little information. And let me explain what I mean about that. So this is, as you all know, the very famous Anthony Fauci, who has become a celebrity, even though he's been around for 5 presidents. He's a new celebrity. What Fauci said here was the flu has a mortality rate of 0.1%. This, meaning the coronavirus and COVID-19, has a mortality rate of 10 times that, so 1%. Now, here's another person, just recently in the Wall Street Journal, Jay Bhattacharya, who's a professor of medicine at Stanford, and a bunch of things there. So what he said was, an epidemic seed on January 1st implies that by March 9th, about 6 million people in the US would have been infected. He gave this talk on March 25th, I believe. And he said about 6 million people would be infected. As of March 23rd, there were about 500 COVID-19 deaths. That's a mortality rate of 0.01%. So going 10 times that, that's the flu, and then 10 times that, this is 2 orders of magnitude difference between 2 scientists who are talking about the coronavirus. Next. So how about the economics? What do we know about the economics? Well, forecasts are all over the map. The Economic Policy Institute has estimated a few weeks ago that we would lose 19.8 million jobs by June. The St. Louis Fed, on the other hand, has estimated 47 million jobs by June. And the St. Louis Fed estimated that the unemployment rate would be anywhere between 10 to 40%. Well, that's a huge difference. 10% unemployment rates, we've seen that before. 40% unemployment rates, never have we seen this in the past. The Great Depression, by the way, was about 25% unemployment, and the Great Recession, more like 10, 12% unemployment. So the difference between 10 and 40%, again, it's like orders of magnitude different about how our economy will be there. Just to let you know, as of February 1st, 2020, there were 5.8 million people unemployed in the United States. And we've seen many, many unprecedented effects. And when I say unprecedented, I really mean unprecedented, as you'll see in the next slide. So number one, this is what employment looks like in the leisure and hospitality sector as of last month. As you can see, going back January 2019, 23,000 people lost their job. Then it sort of moved around between 10, 20, 70. Last month, the best data we have right now from the Bureau of Labor Statistics said that employment in the leisure and hospitality sector alone fell 459,000 in 1 month. This is just an incredible number, never seen before. Many of you have seen these numbers, initial claims. Initial claims are people first applying for unemployment insurance. Go back to the 1960s, look at that line. It barely gets above 300,000. And that's been historically true. What's happened in the last few weeks? This is weekly, by the way. In the last few weeks, we've seen up to 7 million people initial claims. What does that mean if we look more closely? Well, March 21st, there were 3 million claims the week before March 21st. Before March 28th, another 6.8 million, then 6.6 million, and then this last week, 5.2. So if there's any hope, any silver lining, you can see that these bars have been declining a little bit. My guess is, oops, sorry, try to go back one. My guess is that if you sum these up, 3 million, 6.8, 6.6, 5, you get a number of like 20 some million. And the decline in these things has been basically gradual. And my guess is that early on, everybody that, when they shut down restaurants and bars, those were all the first initial claims. The next is continued claims. Continued claims are like people that continue to get unemployment insurance. And you can see now it's up close to 12 million. During the Great Recession, it was just over 6 million. So again, unprecedented, never seen this happen this fast ever. And again, this is what the continued claims look like. Growing, but this last one, people think it was a little bit lower than they thought it was going to be, that were the original guesses. This is what it looks like. Unemployment insurance claims as a couple weeks ago for California. We get these a little bit later. And you can see it's at that time it was a little over 1 million. Now it's a little over 2 million initial claims. So those things have also been high in California. This is retail sales. This is the percent change in not employment, but in the retail sales. Again, you look at the Great Recession, that's the blue bar, around 2008, and you can see what happened. We lost about 4% in terms in the bottom of the Great Recession. Retail sales fell by 4%, and as you can see that line, it doesn't go straight down. It's slowly moving down. And now what's happened is we've lost 8.7% last month in terms of retail sales. This is a very interesting graph, I think. This comes from a company called SafeGraph, where they have teamed up with Google and Apple, and people anonymously allow them to use their phones. And what they can do is they can track where people are going, their foot traffic. And what you can see here is starting back in January, everything was about 1. And now you can see what's happened. The bottom one there are movie theaters. So movie theaters have lost 95% of foot traffic. Shopping malls, hotels, sit-down restaurants, bars, etc., have all fallen much more than 50%. These are huge declines. Again, never seen before. The magnitude we've seen in just a couple of weeks. This comes from, again, this is SafeGraph, but these are brands, these are stores. And what you can see is Starbucks, for example, foot traffic has fallen almost 60%. Of course, they've opened up, drive-through, but all these companies are hurting, falling by 50% or so. The only one that seems to have sort of maintained itself is Home Depot, because we're stuck at home, I guess, and we see cracks in the wall and we decide we're going to go buy some paint and fix it, since it's the only place we can possibly go. But everything else, devastating. So locally, we're very hard hit, and we're going to hear more about that from both Kathy and Sherry coming up. But the two sectors that really get hit first in this regard were leisure and hospitality and retail. So this graph, remember I mentioned above that Economic Policy Institute said there would be about 19.8 million job losses by June. And if you look at the top panel up here, what this says is, if you look at California, in the private sector, that is not including government, we have 14.8 million jobs. Leisure and hospitality in California, about 2 million jobs. Retail, about 1.6. And what we're doing here is we're saying, look, if we take this data seriously from the Economic Policy Institute, how many job losses, let's apply that same ratio to California, Santa Barbara, and the Tri-County. So what you can see is, for California, if we do see a US decline of 19.8 million jobs, the private job loss in California will be almost 2.3 million people who will lose their jobs. Leisure and hospitality, 164,000. And retail, about 133,000. Now let's focus on Santa Barbara, the second line, and you can see what's going to happen. Private job loss is going to be 22,000 people, almost 23,000 people. Leisure and hospitality, about 11,000, and retail, another 7,000. And we're going to see in a second how to compare these numbers. The bottom panel, the bottom panel tells us that from the St. Louis Fed, who believes we're going to lose like 47 million. If we lose 47 million in the US, how does that relate to Santa Barbara? Well, we'd lose 54,000 private sector jobs, 26,000 roughly leisure and hospitality, and 17,000 in retail. How is that going to relate to the unemployment rate? Well, let's look at Santa Barbara County as of February 2020, the very top bullet. You can see there were 7,900 people unemployed. I just told you there'd be up to 25,000 people unemployed. At that time in 2020, in February, was 3.7 unemployment rate. So let's take that projection I just made from the Economic Policy Institute. Look at the blue line that's upward sloping. If we lose 28,000, 23,000, 25,000 jobs, and you move up that little dashed line, what you'll see is that we're going to hit about a 15% unemployment rate, given this very low projection of 19.8 million. And by the way, that we've already surpassed the 19.8 million when I added up those initial claims, if all of them become unemployed. And the next slide, I'm going to look at whether or not, from the St. Louis Fed perspective, of the 47 million job loss. So if the US loses 47 million jobs by June, that means we're going to lose 50-some thousand jobs in Santa Barbara. We would have a 30% unemployment rate. It's just going to be massive and devastating, given that all these people have to apply for unemployment insurance, try to get their jobs back, and who knows what the loss is going to be for the businesses that employ them. So who's at risk? Well, if you think about those areas I just talked about, leisure and hospitality, retail, many of them are minimum wage or a little above minimum wage. They're lower income individuals. And when they lose their job, they really have nothing left in order to survive in terms of long savings. So this is a picture of what it looks like in North County versus South County in terms of the people, the income distribution. The red bars indicate those individuals who make less than the federal poverty limit. And you can see that in South County, there's about almost 11,000 people, households, who are under the poverty line in Santa Barbara. And if those individuals in South County, and if those individuals end up being unemployed for a long period of time, it's going to be a major impact on our social service sector, no doubt about it. And the same thing is true in North County. So after the talk, we're going to supply some things. I mentioned a bunch of different individuals here and different ways to look at the economy and what's happening. And we're going to be sending out an email afterwards. All these are links that you'll be able to click on to get an understanding of what other people are thinking. Anyway, thank you. Now we're going to switch to our next speaker. Our next speaker is Lynn Fitzgibbons, who's, I think everybody has now known, just like Fauci. Lynn has been constantly been asked to present webinars, and I do hope she will continue to do this. All of us want to know exactly where we are with the infectious diseases and what's going to be happening. So thank you very much for participating, Lynn.
Thank you, Peter. And Charlie, I'm assuming you can hear my audio. Okay, so Fauci was unavailable today, unfortunately. I appreciate you putting up with me instead. And I appreciate this opportunity. I wanted to open with a gratitude. I think as an infectious disease physician, when I see the economic toll that this has had, I am absolutely humbled. And I'm humbled really primarily by I think the extent that every one of you have taken social distancing seriously, and your communities, your families, your friends. And I think I wanted to really open with a sincere gratitude, but also a sincere maybe statement that through these efforts, you have saved lives in our community. Because of what has been done thus far, lives have absolutely unequivocally been saved. And so opening with a quick note of thanks. Let me tell you about SARS-CoV-2 virus and COVID-19 disease. Charlie, are you clicking me forward? Thank you. So here we see the symptoms of coronavirus. And I'm not going to read these to you. I think my goal today is not to tell you everything that I want everyone to know about COVID-19 disease, which is of course the disease caused by SARS-CoV-2 virus. But I simply point out that we now increasingly understand what most patients suffer when they have this infection. The vast majority have fever, dry cough, fatigue, and then there are a variety of other flu-like symptoms that people experience. As we get more data outside of, this was 55,000 confirmed cases in China. As we get more data from around the world, from our European colleagues, and now thankfully from our CDC, our own experience, our own epi data in the United States, I think we're seeing really through the eyes of our own colleagues, our own patients, the experience they're having with this disease. And it looks a lot like the Chinese experience. I would say we're increasingly aware of some more subtle symptoms like anosmia, where people maybe lose some sense of smell, maybe more diarrhea in some cases, but essentially the symptoms that we've heard about thus far. Next slide, please. I'm also not going to use this forum to debate the potential treatments. I'll mention quickly that there are maybe 4 or 5, I think, leading treatments that are being investigated. Remdesivir is an IV antiviral that acts at the level of the RNA polymerase and being investigated in 6 clinical trials made by the company Gilead. We heard today that one of the clinical trials based, I believe, in China has actually been discontinued, not because of any problem with the medication, but actually I think because it was targeting mild to moderate cases as opposed to the more severe cases for this IV medication. And it sounds like they were having some trouble recruiting and enrolling patients in that study, but at least 5 ongoing clinical trials for remdesivir. Here at Cottage Health, we have some experience with this agent in the last month. There's also an older HIV combination medication called Kaletra that we actually no longer use in HIV because it has a fairly terrible side effects, GI side effects. But this has some reason to be believed it may be helpful. The most recent data published in the New England Journal last month showed it probably isn't going to pan out, but still being investigated, and there may be more to come with Kaletra. The topic I think of most interest in the last couple of weeks has been hydroxychloroquine. This is an old malaria medicine that has been repurposed over the last few decades for use with rheumatologic disorders, so rheumatoid arthritis or lupus, an effective medication for those purposes, and there's a lot of interest as to whether or not it's helpful in the case of SARS-CoV-2 infection or COVID-19. A lot of us are using it at this point. I wouldn't say that the data is very strong to suggest that it's helpful, but it's, again, a very generally well-tolerated medication, and especially for those in whom we have really no other option. I think there's some reason to believe it may have some benefit, and so as we're waiting for more data on it, I think definitely a potential treatment, although far from definitively proven. Tocilizumab, I'll just mention quickly, is related to this immune reaction that we're seeing, especially in some patients during the 1st to 2nd week, where they tend to kind of smolder along with their symptoms and then suddenly get much worse. And the idea is that suddenly their immune system turns on and they have a huge inflammatory response that we call the cytokine storm. And the idea here is that tocilizumab actually just calms down that immune reaction. Our immune system is there for a reason, however, and so one of the worries that we have is when we calm down the immune reaction too much, we put people at risk of other problems from that blunted immune response. But another interesting option. And then finally, I just wanted to mention an exciting opportunity that is being used in many places and being explored locally, which is convalescent plasma, and the idea of taking the serum, so part of the blood, from a patient who's already had this disease, has recovered. As my 7-year-old son puts it, their blood has learned how to beat this infection, And so using the plasma with the antibodies from the patient who's recovered, screening, make sure it's safe to give to somebody else, but then using that actually as a therapy for the next patient who's dealing with a severe infection. So I think very exciting work being done right now with convalescent plasma. At the end of the day, what do I want you to remember? I think today I really want to reiterate that there is no treatment that's yet clearly shown to be beneficial in any sort of high quality clinical trials. Lots of reasons to believe that there are good opportunities, good options available to us, and we're exploring this, but right now there is no clear-cut answer. Next slide, please. So then I ask you, what factors really impact mortality for a viral infection with no known treatment? And some of you have heard me say this before, but I ask you to pause for a minute and consider our experience with Ebola in 2014. So during this outbreak in West Africa, the case fatality rate in West Africa itself was 50 to 90%. In other words, for every 100 patients who had this horrible disease, this horrible virus, between 50 and 90 of them were expected to die. When we had patients in the United States and Europe, that really a trickle-out effect from the West African outbreak. We did see, as you all remember, we did see these cases around the US and in Europe. And we were able to give those patients really aggressive supportive care, good ICU level care, support their blood pressure, support their kidneys, and really support their bodies until they recovered. The case fatality rate in our setting was far different. It was 18%. And so here I just point out that in the absence of really proven curative treatment, it's really the critical and supportive care that determines whether people live or die. And I'll ask for the next slide, because I think that is exactly the crux of flattening the curve. I'm not going to explain to everyone, all the educated, sophisticated economists and policymakers on this webinar. I'm not going to explain flattening the curve, but what I'm going to point out is that the measures that have been put in place thus far have absolutely, in our community, flattened our curve. And the idea here is we have those ICU beds, we have those medications, we have those nurses, we have those doctors to a point, to some capacity. And above that, I would argue we get to a point where we exceed our capacity. And when we exceed our capacity, we have circumstances like some of the horrors that we saw in Italy, for example, or tragically in this last couple of weeks in New York City. I'm really hopeful and optimistic that through, again, incredible efforts, social distancing efforts, we've been able to, thus far, keep our local curve relatively flat. So what is the expected recovery for those with mild illness? Most of them are getting better within a couple of weeks. I've had patients with really very few symptoms get better within a week. And most of our patients with more severe disease are taking several weeks to get better. So far different than a flu. I would say that most patients who do have severe disease or end up in the hospital are taking, I would say, many weeks to get better. But when they do start to get better, that recovery is seeming to happen quite quickly. So where are we with testing? So I want to point out there are two different types of testing that are being discussed a lot in everyone's 24/7 news feed. And I just want to be very clear on what these two different types of tests are. The first is PCR testing. And so PCR testing, remember, is looking for the virus being there now, meaning it's looking for the nucleic acid, the RNA related to that virus. And we can check for it in different parts of the body. The place that we are most curious to find it, most hopeful to find it, is in the back of the nose, in the nasopharynx, in the back of the throat, in the oropharynx, or from a sample deep down in the lung. So either sputa, or if a patient is on a breathing machine on a ventilator and they have a tube all the way down their trachea, we could take a sample from deep down inside and send that off. Apologize for my typo here, but I'll finish my thought out loud, which is that a positive PCR may indicate that a patient still has actively replicating virus. It also may indicate, though, if it's later in someone's disease, if they still have a positive PCR, so we swab and we find it, it may be left over from their recent infection. Doesn't necessarily perfectly correlate with still being infectious, although we certainly worry that that's what it suggests. Let me transition then to serology. So serology is the idea that we want to find out if someone's body, someone's immune system recognizes an infection. And so what we do is we check for antibodies. And if antibodies are present, we say that a person may be immune to that infection. Classic example would be, for example, measles. Measles antibodies are checked for persons or people who are coming to work in a hospital or a clinic. And it's to make sure that that person is protected against measles and immune to measles. We know that if there are antibodies present for measles, we know that that person is likely to be very protected. It doesn't always mean that you're protected, though. All that antibodies indicate is that your body has previously seen that infection. And as we learn more and more about the antibodies to this virus, we will know over the next few months whether antibodies being there also mean that someone is protected. It certainly means if someone has antibodies, it certainly means that they recognize that virus or a virus like SARS-CoV-2, but it doesn't necessarily, again, mean that they're protected. And I make that subtle point because I want us to really be, I think, careful as we're hearing more about serology in the coming weeks, months. The final thing that I want everyone on the webinar to be aware of is that during a normal year, we have 4 common human coronaviruses which circulate around the world. They cause between 5 and 10% of illness around the world, of upper respiratory coughs and colds around the world every year. Very common coronavirus. That's different than this specific virus, but related. And so, sorry, can you just go back one slide, Charlie? Thank you. And so I just wanted to point out that some antibodies that we're looking for related to SARS-CoV-2, we're hopeful that if I have this infection, and if I get an antibody test, let's say in a month, we're hopeful that that antibody test will say, yes, positive. She has been previously exposed to SARS-CoV-2 and her immune system recognizes it. What we have to be careful about, though, is that those antibody tests are specific for SARS-CoV-2. We have to be careful that they're able to distinguish my SARS-CoV-2 infection from, for example, the month before when I may have been exposed to a normal coronavirus. And so this is, again, another subtlety in serologic development that I think we have to be careful about as more lab tests are coming available. Okay, last slide, I think. So in thinking about you as an audience, I considered over the last couple of days, what challenges do I foresee as an infectious disease physician with relaxation of social distancing? And I have colleagues who don't enjoy the term relaxation, but I'm going to use it, or relaxing the social distancing. So we have the potential for, and this is straight from Tony Fauci, we have the potential for rebound. I would argue that much of our success in Santa Barbara has been related to how aggressively we socially distanced, how well we socially distanced before we had extensive community spread. And what that meant is when everyone went into their boroughs, when everyone went into their own homes and really isolated, we stopped bumping into one another. That also means, though, that our community is different than Manhattan. Most of the people in our community have not seen this virus yet. And so once our social connections and our interactions restart, inevitably, some of us who are not immune to this virus are going to probably bump into this virus. And some of us will get symptoms. Remember, the vast majority of people who are exposed to this virus do not develop moderate or severe disease. Most develop a mild illness, 80 to 85%. But as we're relaxing our social distancing, it would be ideal if we do so in some sort of a deliberate manner. And I don't know what that means for every one of your industries, but I just want us to keep this in mind, that organizations, as they're preparing for returning to operations, that you do so ideally with really best infection control practices in place. I think that's very important from my perspective, from a public health perspective, but I would argue it's also critically important for your success. I think once you start to reintroduce your employees to one another, to your employees, to your customers, you have to, I think, make sure that you're doing so in a safe way to prevent future interruptions as you hopefully continue to return to full capacity. The final couple of points, I think our healthcare system, sincerely, I know we are far better prepared to handle low magnitude rebounds that may occur in the coming months. Far more than we would have been had these occurred in February and March. And I just point that out to, I think, reassure people. And finally, I think I don't want people to feel that going forward, we are constantly going to be in danger of another sharp rebound. I think that concurrent with so much that's going on has been really rapid vaccine development, as well as those serologic tests that I mentioned, which I think are really going to slowly start to help with population level control during, I would argue, our next stage of this pandemic, which may go on for months. And I think this is all, I think, very reassuring. I believe that was my last slide, unless there's something I forgot. And I just wanted to thank you again for the opportunity to talk.
Great, thank you very much, Lynn. That was fantastic. Hopefully people understand where we are with that. And again, if you have questions, feel free to go into the Q&A and ask those questions. Next up, we have Kathy Janega Dykes, who's the president and CEO of Visit Santa Barbara, to talk about some of the things we've seen and will probably see going forward in the tourism industry. Kathy?
Thanks, Peter. I'm going to echo some of the comments that you made, but also paint a kind of a broader picture of how COVID has impacted our tourism industry. Just for a little bit of background, Visit Santa Barbara is the official destination marketing organization for the South Coast. And our job is primarily to drive demand for travel to Santa Barbara and enrich the local economy and certainly create jobs. And I don't think I need to tell everyone, but for well over a century, tourism has played a very vital part of the Santa Barbara County economy. In fact, in a typical year, our visitor spending injects about $2 billion into the local economy and generates upwards of $56 million in tax revenues. But just as importantly, the industry supports more than 13,500 jobs. So as referenced before, the impact of this virus has been and will continue to be unprecedented for the tourism industry. If we look at this on a national level, the U.S. Travel Association estimates that this is going to be 7 times more devastating to our economic output than the 9/11 terrorist attacks. And then with the tourism industry virtually at a standstill, 52% of all travel industry jobs are expected to be lost by May. Let's take a look at where we're at in California. Travel spending dropped to $425 million the week before last. It's down from close to $3 billion for the same week last year. And to put this in perspective, that's an 86% drop from the same period the previous year. And since March 1st, travel spending losses totaled over $9 billion already. And certainly locally, Santa Barbara has been greatly impacted by the loss of revenues and jobs. And we're really mirroring what we're seeing on a state level and also on a national scale. And since travel basically came to a standstill effective March 15, hotel occupancies have ranged between 10 to 15%. It's also worth noting that this is the absolute worst time of the year for the industry because balance sheets are very thin after the winter, and all of our hospitality industry operators rely on a robust summer to carry them through the winter. So given certainly the uncertainty of how long these restrictions will be in place, the summer travel season, which is so critical to our industry's bottom line, is likely to be decimated along with this spring. If we take a look at what's happening on the airport, our airport officials confirmed that we still have scheduled service to all of our markets, which include Seattle, Portland, San Francisco, Los Angeles, Phoenix, LA, Salt Lake City and Dallas, but nationwide TSA screenings are down 90%. And then the airport has reported that overall traffic has decreased by 95%, which obviously will have some future implications for Santa Barbara's future nonstop air service. And this is really unfortunate because in the last several years, we've seen an increase in air service, really to the benefit of our residents. Our organization certainly is not immune to these losses, since 2/3 of our budget come from hotel-generated revenues, which are assessments paid by the visitors. Our own operating and marketing budgets have been impacted. We significantly cut all of our operational costs, which include layoffs and decreases to staff wages. But in spite of these painful impacts to our economy, as we've all said, one day this crisis will end. But realistically, it's going to take several years for a full recovery. And to ensure that that happens, we need to work together to really support our workforce and promote our destination again. It's certainly too soon to predict when travel will resume, but we're right now developing recovery tactics so that we can act quickly when the time is right. And one of the triggers that we're looking at are these national traveler sentiment studies, which are compiled by research companies. And what we know so far is that 32% of our travelers are canceling vacations altogether. About 70% of the postponed trips are now not being rescheduled. And then the latest data shows a higher proportion of travelers considering rebooking their trips in August or beyond, which is a lot later than we had hoped. But on a positive sign, nearly 7 in 10 American travelers say they miss traveling and they can't wait to get out and travel again after this outbreak subsides. And American travelers have also surprised us by saying that instead of choosing large cities to visit, as they typically would, they are now more interested in beach resort destinations in smaller cities, which is obviously good news for us. So the combined impacts of the virus and the economic recession will certainly change how people travel in the near term. We're going to see definite trends such as more staycations, regional vacations, and certainly travelers opting for road trips over flights. And the good news in most of the recent surveys indicate that there will be pent-up demand for travel after people have spent so much time indoors. I'm sure all of us feel the same way. And Santa Barbara's appeal is so unique and enduring and is truly iconic destination in California. So once these restrictions are lifted, our region will be particularly well positioned to attract that drive market, such as the LA resident who initially will be interested in getaways closer to home. And Visit Santa Barbara, we're fully committed to ensuring that our businesses survive this and are ready to function when what we call normal life resumes. And as we have done during previous disasters, we've adapted in response to the pandemic. Our social channels and website are being used to promote ways that locals can support area businesses and attractions. We've created guides to online shopping, delivery, and curbside services, even virtual tours, which is a big trend, and other online activities offered by our local businesses. And this is not only to generate support for our community, but really to keep people inspired by Santa Barbara's unique qualities and dreaming of that day when it's safe to travel again. On the business side, we launched a new webinar series to bring key insights and research to our community leaders and our members. For now, it's so critical for our local residents to support our area businesses in whatever ways that they can. Support our many restaurants who are offering dine-out options and retailers with online portals. Buy gift certificates for hotels and businesses for future staycations and excursions for your friends and family that are going to want to come up here and visit you when this is all over. And certainly when it is safe to do so and our businesses reopen, I hope our local residents will be tourists in our own backyard and provide a warm, Santa Barbara welcome to the visitors who do return. Certainly our local economy depends on it. Peter?
Thank you very much, Kathy. That's great. Now we're going to hear from someone who's, feeling the brunt of much of this. I'm sure many of you have been to one of Sherry's places, even though you may not know it was Sherry. The Lark, Lucky Penny, a bunch of other places. And Sherry has, like I said, is feeling the brunt of this and is ready to give us her opinion of what she's seen. Sherry?
Hi, thank you, Peter. I appreciate it. I'm going to jump in and steal something from Lynn in that I'd like to start with a gratitude also. I feel very fortunate to be going through this challenging time in the community of Santa Barbara, and there are silver linings everywhere we look. Santa Barbara is so unique in its connection to one another and the tightness of our community and the resilience that we have in really tough times. So I just want to acknowledge my gratitude for the community, the greater community of Santa Barbara. Just to give you two lines on who I am, we have 8 food and beverage concepts in Santa Barbara. We have 350 employees. 345 of them were furloughed about a month ago now. We typically will do about $17 million in sales in a typical year. We're now at a 0 revenue situation. So just to kind of put that into context of sort of a micro view, Kathy did a great job of kind of talking about the macro view of what tourism and hospitality means to the greater area. This is to kind of drilling down into just one case study. Very important, not only locally in Santa Barbara, but restaurants, not only do they represent a very large percentage of the available jobs in our community, but they are connected to a network of people, fishermen, delivery men, distributors, beverage suppliers. I mean, there are tens upon tens upon tens of thousands of people outside of the direct jobs that are connected to the restaurant industry in Santa Barbara. 941 restaurants in Santa Barbara County, 18,000 people. Estimates are anywhere from 60 to 80% of job loss in the restaurant industry. So it hit very, very hard across the entire category. Next slide. To give you a feel for just wages for restaurant workers in the county, $104 million in wages. All of that supporting not only those workers, but how they participate in the rest of our local economy. So the lack of wages for all of those folks is a really big impact in the local economy here. I mentioned the network, and we're feeling it from everyone, all of our suppliers, all of the people that are interconnected within the restaurant industry. It's just been a domino effect all the way down through all of them. Couple notes just to tie back into tourism. 50% of all tourism and hospitality jobs are in restaurants. So again, tourism being a critical component to the economy of Santa Barbara. And then within that category of tourism, restaurants represent a very, very large percentage. Just to drill down a little bit on some of Kathy's comments, a traveling party coming to Santa Barbara, we usually spend about $130 a day on restaurants. It's the highest category of spending that visitors spend when they come into our community, $50 per day, which is per person, which is a very high rate. 71, almost 72% of visitors who come to Santa Barbara frequent a restaurant while they're here. And so it's this #1 activity that visitors comment about. It's the #1 most popular thing that they appreciate about Santa Barbara is their restaurant experience. The California Restaurant Association is estimating that 30% of all restaurants will not reopen as a result of this crisis. You get even higher percentages coming from restaurateurs who are operating on a national level or the National Restaurant Association, and that percentage number goes up even higher. Some of the and we'll lead into our bankers here, which is great. But you know, a lot of research. You know, for those of us in the restaurant business, we're now feel like we're trying to learn how to be a banker and a CPA and an attorney, and it's been and an HR specialist, and so you know, trying to kind of understand the tools that are available to us to try and basically save our businesses. The PPP program, I'm sure you've all heard about. The challenges with while it's a lifeline and it's a critical source of funds in keeping restaurants alive, it's also has some very significant challenges to meeting the needs, the operational needs of a restaurant. There was this mad rush I just got right before the call. They've now shut down applications to both the PPP loans and the EIDL loans because of oversubscription. And there's this push to get them. There'll be a push to use them, but we're still on a government mandate to be closed down. So it's a very challenging situation to have to bring an entire staff of people back so that this loan can pay for payroll when I still have to have a closed restaurant. And so the fear is that those employees will just have to be laid off again in 2 months when the PPP program runs out. The EIDL loans also are challenging in that previously they had a $2 million cap. That has now been reduced to $15,000, and now I understand they're no longer available. So again, some challenges in getting access to the kind of capital, and the bankers can speak more to this, but challenges in getting capital. There have been a number of foundations and organizations that have put together campaigns and for grants for restaurants in all of, I think maybe 12 that we've applied for. In all 12 cases, you know, oversubscription, and basically they've been shut down. And I think that just shows you the extreme need across the industry, and the extreme need that people are looking in the restaurant industry for some kind of lifeline, some kind of help to try to get through this.
Great, thank you very much, Sherry. That was great. So much good information there, and a perfect lead-in, of course, for our bankers who are now here trying to help get through many of these issues, and the ones that were told that they had to give out this money without actually knowing what they were supposed to do and how to do it early on, which became a bit of an issue. And I think many of you saw George on the street corner handing out a lot of cash over the last couple of weeks, but it's been tough, and as Sherry mentioned, they've stopped taking applications. Anyway, the next is George Lease. Many of you know, President and Chief Operating Officer of Montecito Bank and Trust. George.
Hey, thanks, Peter, and echo everyone's sentiment. Boy, what a great community, and my heart goes out to everyone who's affected by this crazy virus. I was with Peter in Scottsdale, Arizona. Was it a month ago, Peter? And I can't believe what the world is like today. That said, if we were to turn the clock back to, in the first week of April 2nd, we're having a meeting here at the bank. We're hearing about this payment protection plan. And, we're sitting in our executive committee room and just thinking about, what that's going to really mean in terms of, how it's going to be sort of operationalized. I think it's going to be really big. I take one of our branches out of service. We have already, by then, I've already limited most of the in-branch contact. We took our Hollister office, and I said, maybe we'll make that into a call center just as questions begin to come in around the PPP program. And then I asked Roger, our senior SBA lender, to sort of be the anchor of that group. And Roger's going to talk a little bit about the nuts and bolts about that program. But when we opened that center for business, I don't know, maybe 72 hours later, I could not believe the volume. I worked at Bank of America, I worked at Wells Fargo, and the incoming volume of phone calls from our community were absolutely overwhelming. I mean, it was both heart-wrenching to hear the needs, the fear, the misinformation, just the general lifeline that was needed, and never experienced something like that. Roger and the team out at that call center, I mean, they must have handled thousands of phone calls, hundreds of emails to try to do what probably our government didn't do, which is really explain the relative, on the one hand, relatively simple, but awfully complex triple P program. And what we thought would be a small number, 28, 29, $30 million of needs. When the program closed last night, we booked over $100 million of PPP loans for well over 300 clients, and that just scratched the surface of the need. We have clients waiting to come back into queue. This is sort of interesting, the complexities of interfacing with the SBA. The SBA was never designed to be a volume lender. It was never designed to distribute money like that. And when our government leaned on the financial industry to be that distribution network, something that we're pretty good at. But when the pipeline to give that money is so constrained, like we experienced with the connection to, it's called E-Tran, it became, a bit of a challenge. Became a, and Roger will tell you, we must have, of a 200 FTE bank, 220 FTE bank, I have 40 FTE decked against, this program right now. And we don't really have a whole bunch of clarity on how it works. Sherry, the comments that Sherry made really ring true to me, because last night at 11 o'clock, as I'm, Janet Garufas and I are here at our office approving these loans as quickly as we can to get them through our system. And I'm looking at the balance sheets and the paperwork that are being submitted by clients who own small businesses. And I'm wondering the exact same thing, Sherry. If the country isn't opened up, this is a temporary fix that is going to go away quickly. And my heart goes out to those small businesses. And this is an absolute lifeline. And it's, but that's a huge concern. We were fortunate enough to integrate into an automated SBA lending engine. We got hooked up a little bit late in the, right at the beginning of this, and the 60 other community banks across the country are part of this network. And when I was visiting with the CEO of that company, it's called Numerated, if you're interested, they said that their 60 banks gave out through that platform $7 billion of PPP money over 60 community banks across the United States, Montecito Bank being one of them. They reported that between 3 and 4 o'clock yesterday afternoon, sort of at the peak of this, in 1 hour, that platform delivered $1 billion of PPP loans into the SBA. And it's been astonishing. We hear that there is going to be a second tranche. We're preparing for that second tranche. We have learned a tremendous amount about how this program works now. I feel like Montecito Bank and Trust could really be a leader, and we could really maybe streamline the process. You will not believe, Sherry, you'll get a kick out of this because you're, now the level of information that we were getting in to validate the requests that the clients were asking for. I've never seen so many disparate payroll systems. I've never seen as many clever ways of accounting for salaries. And I've been in banking for almost 40 years. So the non-standard way of the way the information has to be processed, it was just, it could not be more inefficient a way to get money out. Salud Carbajal called us, and he is working up in Washington, and I thought we gave him some thought leadership about how he might make this program, better. And one of the ways that he could help make it better, we feel, is make the information more accessible. We feel like we do a good job at the bank, but the government didn't do a very good job, and the SBA was really caught in some ways flat-footed, in trying to deliver this program. Roger and I were just talking about it today. The SBA is the SBA. They have a single sort of direction and a single sort of speed. So, when they are given the next round of funding, we can expect sort of a similar set of behaviors. So the things that we can influence, we will, to get the money back into the hands of the community quicker and make to make the impact that we know we can. Separately, I think there is some other things that we're thinking about doing that we are doing at the bank. Payment deferrals, looking at how we can start, restructuring some of our clients' financial debts to get them into a position where they can survive. But boy, it's been a humbling, a very heart wrenching last couple of weeks. And just, I'm so proud of everyone at our bank who, stepped up and helped deliver this. And I absolutely know that the need in our community is greater than what we were able to do at $100 million. The good news, Peter, is that the Fed. So here's another surprise that occurred when the program was launched. We had no insight on how this would affect the balance sheet of the bank from a liquidity perspective and from a capital perspective. Zero guidance. So here we are thinking, oh my God, we have $100 million of new loans on the bank. What's that going to do to the capital position? What's that going to do to the liquidity position of the bank? And then a couple of days later, there's guidance that rolls out that says, that won't, those loans won't count for against capital. The Fed provided a source of liquidity, so we don't have to hammer our deposit base to fund these loans. But none of that was transmitted to us ahead of time. We had to do that on faith. And I brought this is my little visual here. I didn't put any slides in. These are the interim SBA rules. If you want an interesting read, this is the document. And when Roger and I go through that document, how we get repaid. So Sherry, if there is a client who can't pay their loan, what happens to it? What it says in that interim financial document is to be determined. How do we grant forgiveness on this program? What the rule says, to be determined. So it's kind of what this is like an airplane that is flying but still being built, and all of the major systems are kind of still under development. But we feel like this is an extraordinary need, and we want to be there and help everyone we possibly can. So we're really gearing up with some additional technology so that when the next tranche does get funded, we can hit it really, really hard. So Peter, that's what I wanted to tell.
Great. Thank you very much, George. And obviously, it's very tough when we have to make policy during the middle of something. It would have been a lot better. And by the way, back in 2005, there's a link that I'm going to show you. George Bush had a long speech from the National Institute of Health saying our biggest fear is a pandemic, and we've got to prepare for a pandemic. No one is even thinking about a pandemic. And President Obama later, he reiterated that. And yet we were completely unprepared for that in the banking world and in the business world. And now, again, trying to get out of this, we're constructing policy on the fly. And it would be really nice for us to have a plan going forward, especially for our community, to get this going. So next we have, the person who's, again, at the Montecito Bank and Trust, who's the manager of these government guaranteed lending. And I guess, Roger, people either love you or hate you, I guess, at this point. But anyway, thanks for being on, Roger.
Thank you, Peter. A lot of this came as a complete surprise to us, and as everyone has alluded to, this program has been evolving while we're working on it and trying to navigate the implementation, which has presented quite a challenge. But I thought what I would do, because there's likely to still be some confusion about the programs, is just take a top-level view of what these programs entail and what the terms look like. We can get into more specifics, certainly if people have more specific questions, or if necessary, take them offline if they're very involved. But if we go to the next slide, I just give a brief overview of the EIDL program, which was the program directly with the SBA online. That program evolved as people were signing up for it as well, and has continued to evolve until just now, when they've reached their funding limits. So that was offering a 3.75% loan for small businesses, 2.75% for nonprofits. They're offering up to a 30-year term to repay, with a $10,000 advance that's forgivable and becomes a grant, and loan amounts initially up to $2 million. That evolved as well as we went along. And next slide, we see that we then have the Paycheck Protection Program, which was done through banks and other lenders, offering a 1% loan for 2 years with payments deferred for 6 months, and loan amounts up to $10 million. And the response to this program was absolutely overwhelming. It was also, some of you know, split up into 2 different application dates. Starting on April 3rd, it was open to small businesses and sole proprietorships, and included certain nonprofits, and was designed in most industries for 500 or less employees. And we really scrambled over the course of that week to be open to accept those applications, and we did, starting on April 3rd, because we felt it was important to be involved. And senior management and the board really stepped up and decided that we were going to do this, even though we did not know all of the terms or all of the rules at that point. April 10th, it then opened up to allow independent contractors and self-employed people to apply to the program. The program through the SBA is different from other types of SBA programs that we are used to. And so we had to learn what the new requirements were, and how we were going to process these loans. And as is somewhat normal with the SBA, but perhaps more so in this case, sometimes there were no black and white answers. There were a lot of gray areas subject to interpretation that we and other lenders had to take a look at and make some decisions as to how we were going to implement this. The loan request, for some of you who have looked at the application or looked at the information on this program, was based on an average payroll, average monthly payroll times 2.5. They wanted the EIDL loans, if they had already been taken, to be refinanced in this program, less than $10,000 advance. That became a grant and was forgivable. They capped individual employee salaries at $100,000, and allowed for some other uses of proceeds, with 75% of the proceeds expected to go for payroll. And now we get into the forgiveness aspect of the loan, which we do not yet have guidance on. we know in general, the idea is that once the loan is received, there'll be an 8-week period where the employer reports back payroll, and as long as they have maintained payroll at 75% or more of the initial number, then they can ask for forgiveness, and the banks will arrange that and arrange to be reimbursed by the SBA or the U.S. Treasury in a manner that is yet to be determined. And then George gave us a pretty good status of where the programs sit now. As of now, we've reached the full funding limit of the $349 billion. We're waiting for an appropriation of Congress that will hopefully infuse another $200 billion into the program. And we're preparing ourselves to continue to approve and perhaps accept other applications as we can and as the funding and the rules become apparent. And so we can take some of the questions that people may have, on behalf of myself and the other panelists. And thank you. I appreciate the opportunity to talk about these programs. Peter?
Great. Thank you very much, Roger. And just one quick thing, and Sherry will probably talk about this a little bit in some questions, but all this stuff we're talking about, Rob, don't forget these are loans. And people have to pay back loans. Now, it's either the people who take out the loans or the U.S. taxpayer is going to end up having to pay back these loans. And let's talk about these numbers just for 1 second. If 30% of restaurants close, and right now, almost all of them are closed, and if other areas in our economy are like that, this is costing us $1 trillion a month to keep this economy closed. And $1 trillion a month, it's a big price tag. And so if we can figure out ways, as Lynn had mentioned, to reopen safely, we should do that. Now, the government can close us down, which they did. And Sherry, a question for you might be, if the government said tomorrow, you can open, how many people do you think are going to come to the restaurant if you were to, if they might be scared? And, that's part of what Lynn was saying. And I think that Sherry and I talked the other day, and if it's like I have to remove 1/3 of my tables or half my tables to get people to come into the restaurant, that's not profitable either, I don't believe. So, let's not forget, coming back is not as easy as just saying, let's turn the lights back on. So now we can open up for some questions.
All right, thank you, Peter. So we got a ton of questions. I'm gonna start asking them. We'll go as long as Peter allows us. If I flagged a lot of interesting ones to ask. If we don't get to it, I apologize. We do have a bunch. Okay, so first one is from Sophie Langhorn, directed to Lynn. She's overjoyed to see that you've been added to the list. Has any patient recovered from COVID-19 and who has also been reinfected? And does this speak to an immunity gain from having had it?
Great question. So the general principle of infectious diseases, for the most part, is that if you recover, and we do for most infections, if you recover, your body has learned how to handle that specific infection. And so as a basic principle, once we recover from something, we hope that we are now protected going forward. We don't have a lot of reason to believe that this should be any different, which I realize is a lot of ifs and whats and concerned with some of my language. What we know is that this is a different virus than the influenza virus. The influenza virus is absolutely classic for having seasonal huge mutations and several circulating strains all at once. That's not yet what we're seeing with this. There's a phenomenal virologist, she and her team at UCSB, Dr. Arias, who was talking about this earlier in the week. And there is some mutation that's occurring within this virus, but it's not huge shifts over a short period of time. And so it's a long-winded way of saying we have every reason to believe that once you've had this infection, you should be protected going forward. There's a small cluster that some people have probably read about, and it may be the root of the question. From last week, the WHO is investigating a small cluster of people who, we were told, had infection, recovered, and now have symptoms again and are PCR positive again. Just as I said with everything else, I want to be very careful to jump to any conclusions about prelim reports in the media. So until this pans out clearly, I would say going forward, we should presume that once you've had this infection, you are very likely protected going forward.
Similar question in spirit, I suppose, from Jean Yamamura. If someone is tested positive with no symptoms, how long are they typically infectious for? Or do we not know until they're retested?
If they've tested positive, you say, and they do have symptoms or don't?
They do have, with no symptoms.
Yeah, so this is tricky. So for those of you who are looking to have your employees back on the workforce, there's excellent guidance from the CDC with regards to when someone who has been exposed is safe to return to a workplace. Of course, the industry in which I work in healthcare, this has been an important question from day one. We have healthcare workers who are infected, who we need back, fighting the good fight in a safe way. And so there's really good guidance on the CDC website for those of you who are looking for this answer for your employees. But the very quick summary is you have to have been at least a week, for the CDC, at least a week since your first symptom, and you have to have been at least 3 days since your last symptom, is a general principle. For those who have no symptoms at all and just have a positive test, the general guidance right now is to wait at least 2 weeks before re-entering the world and being exposed to other people. But again, look to the CDC for your own institution and your own industry.
All right, I'll jump around a little bit. Here are some questions for Kathy and Sherry, whoever wants to, I guess, sort of jump in and answer them, I guess. You guys can determine yourselves. But Bria Little asks, how do you delicately suggest people spend money with area businesses, hotels, gifts, gift shops, etc., if they're potentially facing job loss and recession? Would be curious to see like how perhaps language options could be used around marketing, getting back out in the private sector.
Sorry, did you want to take it first or?
Yeah, Kathy.
Okay, so I think what we're doing right now is we're providing and compiling a list of all of those businesses that are offering, delivery or curbside, products. It's ultimately, what we're suggesting is that people only purchase these if they can afford to do so. But I think what's so important for our community, and this is the reason why we've been really pushing out this messaging through our social channels, and not only about just purchasing to-go food or items that you can purchase online, but it's also really virtual experiences that you can enjoy too. So we're trying to be very delicate with our messaging, but certainly offering opportunities because really our economy and these businesses rely on that.
Yeah, I would just agree with Kathy's comments. I mean, that's the whole issue around, the massive impact around something like this is that everyone's losing jobs, sales are going down, and people who don't have jobs are harder to spend, right? That's just kind of what the economic impact of a crisis like this is all about. I think in this one, it's a little bit different. We are all in this together. I think always you want to be respectful in asking people for either help. We've launched a GoFundMe campaign as an example to try to support our employees with free groceries. And again, you want to be very respectful in asking people for something when you know that they've also been impacted and hurt as well. And so I think by approaching messaging, from a place of respect, and also offering people the best value you can offer, is really the right way to handle it.
Excellent. Here's one from Mitchell, specifically for Sherry. Please speak to the fallacy that takeout or delivery can replace the revenue restaurants need to support or pay their staff, rent, etc., and remain viable. There's a huge misconception that these restaurants can simply pivot to another model and survive, but the reality is those businesses need to serve guests in restaurants in order to do so. Any thoughts on that?
Yeah, I just would say that I agree wholeheartedly with that comment. And while some restaurants are able to pivot to takeout or delivery program, it's very, very difficult for most restaurants to do that, especially if that's not part of their original business model. We tried it for several weeks and ended up losing money on the whole program, which we are not in a position to do. And so we had to shut it down because exactly for this reason. It's most restaurants, when you look at the percentage of sales that are restaurants that are not traditionally takeout or delivery restaurants, the percentage of sales in that for them is so small. And then you add on top of it all of the constraints that we have in our current situation, and those numbers to bring staff back, the overhead, the expense side that's associated with that limited amount of sales is a money losing proposition. To Mitchell's point, we're in the business of bringing people in for a social experience. That's how restaurants stay alive. That's how restaurants make money. That's how restaurant employees stay employed. I wanted to mention briefly also about gift cards, which I think is great and very well-meaning. It does not solve restaurants' problems. It just kicks the can down the road. I mean, those are still goods and services that have to be provided for at some point in the future. There's conversations around discounts and again, restaurants, their margins are so thin and the business has been hurt so badly that they literally cannot take any more of that burden. While all of those things are I get a lot of enthusiastic support. Oh, you'll just do takeout and you'll be great. And I wish it were true. It's really not. And it's actually, I think, a disservice to restaurants, particularly full service restaurants, to sort of create an illusion around that being some kind of a lifeline or some kind of a way out or a way to stay alive in these really, really tough times.
Excellent. All right, I'm going to jump around a little bit. Going to have some questions for George and then Roger to follow. First, I'd like to say Steve Winhager says, I do want to thank Montecito Bank and Trust, the people who work there who were in the office over Easter weekend trying to process these PPP loans. However, other people have not had as good experiences or perhaps worried a little bit. Julia asks, how do people know if they will get any PPP or EIDL loan if they've already had an application in and are still yet to fund? And this person says they have small business customers that are scared and have put in their applications day one within 2 hours of it opening up and still haven't heard anything. Anything you guys can say to them?
Well, sure. Well, first, we understand the absolute need that exists in the community, and the level of the volume and the level of need is extraordinary. We have, like I think I mentioned, we have learned a lot about the program and particularly how to streamline the process. So we are gearing up for the second tranche that we believe will be delivered soon. So for those clients that have put in an application that didn't get funded through this, they're in the queue. They'll get sort of first crack at that process. And then we really do want to open it up to the rest of the community to the best extent we can, using our COVID-19 center and some of the efficiencies we learned in a week. We stood up a call center and a process that didn't exist before in a really short period of time. And as Roger explained, with guidelines that weren't completely clear. Now that we have some clarity and experience, I feel like we could go through this in a much more efficient and much more timely way. So hang in there. We're gearing up for the next tranche and we'll be there for you.
So there's a similarly related question from Jason Spivak. Sorry if I'm absolutely destroying people's names, by the way. Is what is your viewpoint on additional funds being added to the PPP via some sort of supplemental proposal? Any insight into the likelihood of this happening?
Well, yeah, I mean, we hear that it's happening right now.
Okay.
I alluded to that. Our congressman called us with some clarity. He wanted to learn about some of the experiences that we had, as he could give that thought leadership to the leadership in Washington. So I feel like over the weekend, something is going to brew and hit hard, next week. And we're gearing up for
Okay.
it.
Gotcha.
In our belief that it's going to happen.
For Roger, Larry Byer asks, or first states and then asks, we just received funding for our PPP loan. However, the loan documents did not address the forgiveness of the loan and how the forgiveness is to be calculated. Our banker is currently looking into this, but can you shed any light on to this sort of uncertain scenario?
Yeah, so this stems to the search for implementation. They needed an available loan document. They used an existing SBA loan document, in order to expedite the process rather than trying to write a new one. So although the forgiveness element of the program does not appear in the loan documents, it appears in the guidance that came from the U.S. Treasury that we use to implement the program. So that is certainly confusing to people, and that's come up quite a few times. It's not actually in the loan documents, but it is in the guidance that was given by the U.S. Treasury from the congressional bill to the SBA. So there is a forgiveness program. The details of the implementation 8 weeks down the road from now are not yet clear, but they can rest assured that that is certainly part of the program and the intention of the federal government and the SBA.
Okay, I'm gonna jump around a little more. Let's see, one for Kathy. Frank asks, the future traveler will probably shun urban areas and look towards more rural agricultural areas. Mm-hmm. How will Visit SB connect Santa Ynez wine country as a way to bring people into Santa Barbara?
Well, we're very lucky because Santa Barbara County has so many attributes, and that's what's so appealing to our visitor industry. And certainly the wine is a big part of it. And that's a big part of our overall messaging. It could be tasting in our urban wine tasting rooms in the city of Santa Barbara or going up to the vineyards. But clearly that's part of one of the reasons why our visitors travels into the area. And we work really closely with the Santa Barbara County Wine Association to be able to kind of promote that message. We're really lucky because our wineries are really special in our area and quite different from other areas, and that's very appealing to our customer.
Back to Roger. Bruce Savitt asks, any idea on what the long-term effects are going to be after we're free to do what we want and go back to work?
Yet to be determined. I mean, we don't know how long this is going to last, and as a number of people, particularly in the hospitality industry, alluded to, there are some holes in the program and the way that it's designed for certain industries. If you're not able to operate, and you don't bring your employees back, and you can't get forgiveness on the loan, you have a loan with an attractive interest rate of 1% for 2 years, but you nonetheless have a loan. So the effects of these loans and these programs, whether it's the EIDL program or the PPP program, will have a lasting effect on people's income statements and balance sheets for time to come, just from the financial standpoint, and then from a cultural standpoint, medical standpoint, others can answer to that. There are certainly going to be lasting effects from this pandemic.
Okay. Yeah. Jumping over to Peter, I'm going to have you one, perhaps also say what you think about long-term effects from your perspective. And two, there's a question from an anonymous poster and a similarly worded one from Eric Sonquist. That how do the unemployment numbers that you mentioned before reflect undocumented workers? There's a large subset of people in Santa Barbara County and California more broadly that are undocumented. How are those guys observed and seen in data?
Great question. So the way that the unemployment numbers are calculated are different than the way the payroll numbers are calculated. When we look at the payroll establishment report that comes out monthly, it talks about the changes in jobs. So those are typically ones that firms know they have a job and they admit to it. The unemployment side, the current population survey, it's issued to households. So all households, it's a random sample of about 60 to 80,000 households a month. All households get it. So it's not about whether you're documented or not documented in terms of being unemployed. A survey will come to you. Now, whether or not documented or undocumented household members feel like answering the question, that's a different story. But presumably, when it comes to that household, they can say they're working or not working or looking for a job, and they would be counted in the unemployment numbers. Again, but they have to be answering the question to be able to do that. And in terms of the long-term effect, there was a question that I saw that I was going to ask anyway to George or Roger. So when you take out these loans, is it going to the individuals who take out the loans, is it going to affect their credit, their scores at all, or their future and being able to borrow and maintain loans, et cetera?
Roger.
Yeah, I can speak to that a little bit. I mean, part of the answer is we don't quite know yet as to whether it affects their credit score. If they have a short-term loan that is then forgiven, the net effect on their credit should not be particularly positive or negative. But any business or any person who's taking on debt, it affects their ability to borrow and to function later, not only in terms of money that comes out of their cash flow that can't be spent otherwise, but also their ability to borrow other money. This becomes part of their debt service, part of the money that they have to spend out of their cash flow is affected for the term of the loan. So it does have an effect.
Okay. Okay, so I want to be respectful of everybody's time, and I want to thank all of our panelists who have, given us their time. I know you're all busy, and I thank everybody that joined. One question, a follow-up I might have, like I mentioned, we're going to send out an email in a day or two from this event, and I would like to know if each of you have something. For example, someone asked, is there a single document that explains all of these loan programs that they could just grab and read? And if we could include that in that, and same with you, Lynn, if that thing from the CDC about how you can get so we'll try to incorporate all those in the email to give everybody information and links to be able to sort this out. In any event, I want to thank everybody for joining us. We're going to do this again soon. Thank you very much for the panelists, and please stay safe.